Hi traders, my name is Mary Redmond and I'm talking right now about the US dollar Swiss franc pair. So this is a pair that's been in a decade-long downward trend, and it's down from $1.80 10 years ago, and it appears to be in a real liquidation mode now, where all of the people who are long are probably getting forced out of their positions. And there are a number of reasons why I think for the next week or two this may be a pair that you could trade to very successfully to the downside. The employment report, which came out on Friday, actually showed a weaker than expected job growth of only 54,000. And this could have been a one-time blip. There are a number of different factors that could have been involved, including the supply chain disruptions from the Japanese earthquake, because that can disrupt part supplies for automakers as well as semiconductors. And this could have been just a one-month blip. It's really not enough to make the Federal Reserve contemplate another round of quantitative easing, but it is enough to push back the interest rate expectations for the US Fed. And right now the market's only expecting 22 basis points from the Fed over the next 12 months. The expectations for the Swiss National Bank are a little bit higher at 39 basis points, but that alone isn't enough to cause this much of a downward trend. There may be a shift, a move away from the dollar for the time being in terms of being the only safe haven, and part of the reason for that may be the political delay in accept limit in the US. So that's going to put a lot of pressure on the dollar, and while that's very likely to happen in the next couple of months, until it actually does, it's going to be harder for this pair to go into any type of a true upward trend. And you can see from the SSI index, there are a lot of retail traders who are long this, 5-to-1 long. So that's usually a bearish contrarian sign. So this pair is obviously at some point it's going to make a pivot point and turn around and go in the opposite direction. I mean, none of these trends ever last forever. But in order to see that, you're probably going to have to see a really true pivot point, which usually doesn't happen when people expect it. You can see what happened with the US dollar Japanese yen pair back when the Bank of Japan was intervening in the market. You saw a big pivot point spike down, followed by a rebound and a larger candlestick going up. You've also seen this in some other pairs when there's a true reversal in sentiment. But since there's 4 other central bank meetings this week, which does not include the Swiss bank, and the US Fed meeting doesn't come till the 22nd, there's really no catalyst to change this particular trend. And it's more likely to probably just continue. I mean, it's just a law of trading. The trend continues for until there's something which changes it. So what I'm thinking is, if there's some type of a spike up this week, possibly some change in this channel or a move to the top part of this channel, which would be in the 84 level, this could be a good short here. But really, for the next week or two, there's just not going to be anything that's going to act as a catalyst to change this trend. So that's why I favor this particular pair to the downside now.